Business buyers pay too much and sellers don't get enough because they don't know how to value a business. Valueabusiness.com.au. You might only get one chance to get it right. When you're valuing a business, it's important to understand the trends, where the business has been, where the economy has been, where the business is headed, and where the economy is headed as far as future trends are concerned. After all, in valuing a business, you're trying to forecast future income. In this presentation, we're going to have a look at consumer confidence, business confidence, and interest rates. Consumer confidence generally comes in at around the 100 mark. In January 2005, which I agree was the peak in our market in recent times, it went up to 127 and dropped back to 64 in November 1990, just before the major recession. So why was it high in 127? Well, inflation was high, prices were going up, value of property was going up, people were generally confident and outspending. And look at that dip there in January 08 through to January 10. A bit choppy up and down, but still around that sort of 90, and it even went under 80 around about the time of the collapse of Lehman Brothers, I'd say, in the States. Business confidence, on the other hand, measures businesses' confidence as to the future and where they think we're headed. The average in Australia is 5.89, the highest in May 2002. See the difference between the consumer and business confidence. Business confidence peaked in 2002. They probably knew what was coming. Consumers kept spending until 2005. The lowest business confidence was in January 2009, hitting a record low of minus 31. And there you can see a similar trough in business confidence that we saw with consumer confidence. Now, interest rates. This is where the government gets to play a hand, or should I say the Reserve Bank, in relation to government policy potentially. But this is the regulator working out whether we need stimulus or not. Probably at the all-time low, or maybe a little bit lower to go after May 2013, but May 2013 with a cash rate of 2.75, historically low. The average is 5.46. The highest was, again, that recession. Remember, we saw that dip January 1990, hitting a record of 17.50, and the lowest cash rate, we've got it now, May 2013. So the Australian interest rate, this is where the Reserve Bank gets in and reduces interest to try and stimulate activity and stimulate confidence within consumers and business generally. If we draw that graph out, it was increasingly higher back through 10 and 9, but now we're at 2.5. So what does this mean for us? It means that if we can track consumer confidence and business confidence and what the Reserve Bank's doing, we should be able to get a good eye as to what might happen into the future. It's not bulletproof, but it gives an indication. You must start to map trends and say, if this happened in the past, there's a very good chance it's going to happen in the future according to normal prediction. It's only a prediction. It's better than a guess. It's an estimate. But if you know where we've been, you've got a better chance of understanding of where we might be going. For a free consultation on the value of your business, look at our website, valueabusiness.com.au, or email us. And if you want to know how to maximize business value, go to that web address there. Thanks for listening today. Valueabusiness.com.au. When you want to know what a business is worth.